Welcome back to my channel. In this video, I'm going to cover Whirlpool. This is a big appliance company, very well known here in the United States. They are the biggest appliance company in the US. They are also growing internationally, especially since acquiring a new company in Europe. Their European sales were already a good part of the business, and now they're going to be even bigger. They also sell down in Latin America. So this company is really growing globally, and it's been a really good company here in the United States. They pay a really nice dividend. And overall, this is a value stock. This is a slow moving, slow growth company, really stable. It's a stock that I began to buy some shares for my income portfolio. Not a whole lot, just a little over $1,000. They announced their earnings and the stock went down quite a bit. I wanted to analyze the earnings and make my decision on the stock, whether I should buy more shares, hold, or sell my shares in Whirlpool. I'll go through and do my analysis and share that with you. I'll share with you how I'm going about this particular investment and what my decision is going to be on this stock. Before I proceed, just a quick reminder, I'm just sharing my journey as an individual investor. None of what I provide is financial advice, and I do not recommend that you buy Whirlpool stock nor sell it. Now, Whirlpool is a really interesting company. It is a stable company. It's been around for a long time. I have several appliances in my home that are manufactured by Whirlpool, and so do a lot of people. Overall, their business really had a boom during COVID because people were really at home, stuck at home. So they upgraded their appliances. And for good reason, they wanted to cook more often. They wanted to just have a nicer home, a more comfortable home. Let's take a look at the fundamentals now and see where those land. Their market cap is $5.15 billion and the revenue is $19 billion. So you're actually getting a company for a fraction of what their sales are. Net income last year was about $400 million. This year, it's a little bit mixed. Their most current earnings, they actually had a loss, which was concerning. They do really have a nice dividend, a 7.4% yield on their dividend, and they committed to doing it for the first and second quarter. So that's really interesting. The price target on the stock's $120. That's the average price target. And several analysts cover this stock. So that is interesting that analysts believe the stock's going to go up in price. Over year to date, the stock is down 21%. And this stock has really seen a downward slope ever since the April of 2021 timeframe. It's been going down. The high was above $234 per share, and it's now down to $94 a share. So it's caught my attention because this is a very good company. It's a very good company that I'm willing to buy if it's a little troubled, but really on the rebound. And I think that's the story that I'm beginning to pick up on Whirlpool. Their growth over the last couple of years, in 23, they didn't grow. And primarily because in 2021, they just grew so much. This is a slow grower. They grow 1 or 2% per year. But in 2021, just people got a lot of appliances. And what that created was a drop in sales in 2022. And they're still really seeing a reduction in sales to this point. With the acquisition of a company in Europe, I believe it's called Arçelik, they should really increase their revenue going forward. So that's a sign of positive news with regards to their revenue growth. Their cash flow, historically, they've been a good cash flow company. And what I wanted to do was use their 2019 numbers and grow them a little bit. And the reason for it is the whole COVID era really artificially inflated numbers and really mixed them up. So I'd like to get back to just some clean numbers. And I feel like 2019 is a clean starting point for Whirlpool. So I'm going to use that in my valuation of Whirlpool. As we look at other items like the balance sheet, I believe their balance sheet is in good health, below 3 for net debt to EBITDA. And I take the net debt. I don't take full debt because that can misrepresent. If a company has a lot of cash on the balance sheet, obviously that cash should be used to pay off debt. So my net to cash EBITDA is below 3, which is very acceptable. Looking at the forecast, it looks like 5 analysts cover the stock. 3 of them have a hold. One has a strong buy and one has a sell. As mentioned, the average price target is $120 per share. The high price target is $150, and then the low is $79. So if the average comes true, this is about a 25 to 30% appreciation stock, which would be really attractive. The earnings per share are very optimistic. It's optimistic because in 2023, the earnings per share was $8.72 per share. It's expected it's going to go up to $13.67 in 24, which is a big increase of 56%. And from there, it's going to grow even further, an additional 8% in 2025, and then an additional 11% in 26, which looks really, really promising. Now, looking at their dividend is a pretty high dividend, 7.4. And I think it's a combination of their stock price going down over time. And this company tends to grow their dividend. They don't like to pull back on what they pay. So that combination has made it so that this is a high dividend yield stock. They have a 96% payout because I think the business has been losing some money recently. So that is a concern. Will they have to, pull back on the dividend and cut it? They also are not going to be able to buy back shares, which they have done historically. So we'll see where the dividend lands. I'm going to value Whirlpool by looking at their cash flows that I expect from the company. And I'm also going to look at their earnings per share. Let's start with free cash flows. In order to have a clean number, I'm actually going to use their 2019 numbers as a good starting point, which is $726 million of free cash, and then grow that cash by about 4% per year. Nice modest growth. And then long-term growth will be 3%, which is baked into the terminal value. I'm going to have a nice high discount rate of 10%, which is higher than typical, but this company is somewhat on a rebound. They acquired a new business, so I'd like to be compensated at a higher rate for the risk I'm taking. Based on a 10% discount rate, looking at all the cash flows I expect in the future, I get a net present value of all those cash flows of $9.893 billion. The cash on the balance sheet is $1.57 billion, and the debt is $7.2 billion, which I'm going to take away. The equity value after I add cash and take away debt is $4.2 billion, which is lower than their current market cap of $5.15 billion. The shares outstanding are 54 million. So I believe each share is really worth about $78 per share. But the stock is currently priced at $94.60. So it's about an 18% premium that is being paid for Whirlpool stock. Earnings per share is a different story. Earnings per share is quite impressive. For 2023, earnings per share were $8.72, which I'll use as my point of valuation. I'll use a PE of 12, which is a good PE to use for a quality company, which I still believe Whirlpool is, and a growth rate of 5% on that earnings per share. That gets me a value per share of $109.87, which is higher than the current stock price of $94.60. That represents a 16% discount if we use earnings per share. When I blend these two valuations, the 18% on free cash flow and the 16% on earnings per share, I get to a blended 6% premium. And that's because I put more weight on the free cash flow method. And that is a premium on a troubled company. It's a quality name. It's a quality brand. I really like that, but it's still, they're in some trouble. And this is a higher risk stock at this time. And one would be paying a premium, which is really hard for me to reconcile. And I'll consider that as I make my decision whether I'm going to buy, hold, or sell. So should I buy, hold, or sell Whirlpool? Well, I'm going to look at three things: the company, the balance sheet, the discount. First, the company. I think the company is a really good company. I really like their brand. I like their products. It's not easy to start a new appliance company, and Whirlpool has a really good brand, especially here in the United States. So I really like the company. Is it being operated efficiently? I think so, but they have had some trouble recently, so it's a little bit questioned. But overall, I'm still going to say I like the company and I like the management team. The balance sheet's in decent shape. I don't have any concern about the balance sheet at this time. I would just like to see their cash flows begin to be positive and begin to grow. That's really critical. Discount. There's no discount available on Whirlpool, and that is hard for me to reconcile. If I'm taking a risk, I really want to see that there's a payoff here, not just break even or even lose money. So that said, I'm going to be a holder of Whirlpool. I'm going to hold the shares that I own. I own about $1,230 of the stock. I'm just going to hold that position until I see another earnings report after Q2 is done and reassess, see if I think their recovery plan is working and if I could update the valuation to make it higher and therefore see that there is a discount and I could see that the stock price will be rising in the future because there is lots of value at Whirlpool. Thank you for watching the video. I hope you found it interesting. I recorded a video on Whirlpool a couple of months ago and it received a lot of attention. It kind of surprised me. This is a very conservative company, but it's paying a really high dividend. I think a lot of people recognize this is a really well-known brand and are interested in it. So I hope you found my video interesting on it. I'd love to hear your comments on Whirlpool, what you think the company is going to do, how you think they're going to fare with this new business plan. What do you think of the new acquisition in Europe? Love to hear your comments on that. With that, let me wish you the best of success in investing, and thanks again for watching.